Today we will be discussing the definition of an asset, a resource controlled by the entity as a result of past events and from which future economic benefits are expected to flow to the entity. Definition of an asset comprises of two main components. First one is past events and the second one is future economic benefits. The assets of an entity results from past transaction or other past events. Entities normally obtain assets by purchasing or producing them, but other transactions or events may generate assets. Examples include property received by an entity from government as part of a program to encourage economic growth in an area and the discovery of mineral deposits. Transactions or events expected to occur in the future do not in themselves give rise to assets. Hence, for example, an intention to purchase inventory does not of itself meet the definition of an asset. The future economic benefit embodied in an asset is the potential to contribute directly or indirectly to the flow of cash and cash equivalents to the entity. It may also take the form of convertibility into cash or cash equivalents or a capability to reduce cash outflows, such as when an alternative manufacturing process lowers the cost of production. The future economic benefits embodied in an asset may flow to the entity in a number of ways. For example, used singly or in combination with other assets in the production of goods or services to be sold by the entity, exchanged for other assets, used to settle a liability, or distributed to the owners of the entity. Many assets, for example, property, plant, and equipment, have a physical form. However, physical form is not essential to the existence of an asset. Hence, patents and copyrights are assets if future economic benefits are expected to flow from them to the entity and if they are controlled by the entity. Many assets, for example, receivable, are associated with legal rights, including the rights of ownerships. In determining the existence of an asset, the right of ownership is not essential. Thus, for example, property held on a lease is an asset if the entity controls the benefits which are expected to flow from the property. This is the summarized meaning of an asset as defined by the International Accounting Standards. Hope you have been cleared with the concept. Don't forget to subscribe the channel and press the bell icon to remain updated with the upload of any video.